How's it going, crypto community? Jade back with another crypto article. This one from Helen Parts from Cointelegraph, which is titled Deutsche Bank, Aggressive Central Banks Making Bitcoin More Attractive. So let's have a look at this. The potential interest rate cut by the United States Central Bank is apparently one of the reasons for the recent surge in Bitcoin. Deutsche Bank executive Jim Reed said in an interview with CNBC on June 26th. Reed is the head of global fundamental credit strategy at Deutsche Bank and stated, if central banks are going to be this aggressive, then alternative currencies do start to become a more attractive alternative. I'm assuming is what he meant to finish that statement of, but yeah. So Reed referenced a recent speech by Fed's chairman Jerome Powell, who said yesterday that the central bank is considering a cut of interest rates amidst the current economic uncertainty and inflation risks. As such, the US dollar dropped versus major fiat currencies yesterday, recording a 3-month low against the euro, which was allegedly triggered by expectations of multiple interest rates being, interest rate decreases by the Fed. And that's obviously going to drive the price of the dollar down because, we just increased our interest rates. Just last year, we were crying. The economy was crying that we had just increased the interest rates, and we needed to. We didn't get the interest rate back up high enough since the financial crisis. In fact. There's no room for us to really cut rates to help provide quantitative easing into the markets now without going into the negative interest rates, which is what the most of Europe is doing right now. Most of them have negative interest rates on their bank accounts now. And so the US has maintained a positive account up until, now we're decreasing our interest rates again. So we're going to be back at zero in no time, which means we're probably going into the negative since we're getting ready to go into a recession. This is where the books unwind and the dollar is going to go into hyperinflation. This isn't going to be caused by Bitcoin and everybody buying into Bitcoin or into XRP. This is going to be caused by the economic system just unwinding. Everybody's been saying for a decade, since the 2009 crash, they've been saying the end is nigh. Because the end is nigh, right? There's a reason this market has lasted 10 years when the traditional bull market only lasts 6. They've been prolonging it as long as they possibly can to avoid the inevitable. Because when the inevitable comes, there's no going back. And so the new system needs to be in place and ready to go before, crap hits the fan. And so isn't it so convenient that all of these organizations that we're talking about, central banks, are working with one in particular. Now, this article is talking about Bitcoin, but let's be real. Who are the central banks actually working with to avoid this coming calamity that they and many people in the public are well aware is coming, right? Well, the article goes on to claim that this rally in Bitcoin is being driven by this interest rate cut, right? And as a result, Bitcoin has recorded its newest high of 2019, over $12,000, which is impressive. It's crazy. Like, Bitcoin's back, baby, right? Like, it's awesome that we are finally seeing Bitcoin back above 10K, and the rest of the market's surging now too, right? So this is really encouraging. And hopefully we can continue to see ourselves grow back up to our previous highs so that we can start really dreaming about Moon, right? Soon enough, I'm sure. Now, Reed also noted that the recent spike of the crypto prices is particularly caused by Facebook's upcoming crypto project Libra, which is true. Libra brought a lot of excitement into the crypto ecosystem when its white paper was released on June 18th. And since then, Bitcoin has risen 30% from $9,000 to nearly $13,000 at the time that this was published earlier today. So, in the interview, Reed has iterated his negative stance towards easing practices by central banks after previously claiming that the existing fiat-based currency system was unstable and nearing its end, as I just expressed rather heavily myself, right? And saying that these individuals know it's coming. He's saying it right there. Now, providing his remarks back in 2017 in the wake of Bitcoin's all-time high record of 20,000 in December of 2017, Reed criticized continuous printing of money by banks, warning that this could lead to the end of paper money. But the United States isn't alone. In recent weeks, the European Central Bank President Mario Draghi also hinted at new interest rate cuts, and this is because it's not just the United States going into a economic slowdown, a downturn in the markets, a point of increased volatility. How many other ways do they have to tell you that the market's about to dump, right? What we're seeing in the price surge, we're probably going to get a blow-off top from G20 before everybody realizes what's actually going down. And then we're going to see a mass exodus into the digital asset revolution, And I think they're going to be facilitated side by side until the traditional stock market pops and everybody comes flooding into the liquidity solutions that digital assets are going to provide for them, right? That's my perspective of what's coming in 2020. In addition to, as the article points out here, Bitcoin having its reward in May of 2020. So it looks like, hindsight truly will be 2020 for not just Bitcoin investors, but XRP investors and investors in the crypto market as a whole. Now, as always, as I've said at least once or twice in this video already, I am not a financial advisor. You should do your own research. I do appreciate your viewership, and if you do appreciate me covering content, be sure, if you haven't already, to hit that subscribe and ring that bell so you can stay up to date with all my latest cryptocurrency content. If you enjoyed this video, don't forget to also hit that like on your way out, as I can't wait to see you and all the rest of my XRP Martians in my next video on Mars.